Today in the grain market, soybeans slipped a little bit. That higher start faded to a new low. The May contract traded from 865 down to 850. A little bit of a surprise because we really thought that there was going to be some strength coming back into the market to end the week, but that just didn't happen. In the November contract at the 860 level, we haven't seen that at this time of year since 2007. So it makes things much more difficult. In South America, the currencies are also on the decline with the Brazil real down as well as the Argentine peso. Those things weigh heavy to make us less competitive around the world. Maybe there could be some strength ahead. Normally this time of year might breed a little bit of that, but with the idea that perhaps some acres may come over to soybeans from the corn side, could really temper that and basically cap any kind of significant rally from the bean market right now. Spring work is really getting started for all the row crops, so we're going to start to shift our focus to more fundamental issues in Mother Nature and see how the weather is going to start working as we go forward. In the corn, we did make a new low. That improved oil prices were just not enough to really offer any support for the corn market, and it's really starting to sink down to levels that we were thinking that we might not even get to. The support number was 330, and we were testing that number and actually got below it. There is some real worry that there is some bigger downside potential with the ethanol production really almost coming to a standstill right now. Open interest is also dropping. That really indicates that there is weakness in the futures. That's going to be a little bit lower. Commitments were down. Margins are really not that good right now for corn, and it certainly looks like that the futures are just kind of like embodying a sentiment of, the grave situation that we're looking at around this country. Now, wheat was the only highlight today. It did rebound well. I think bargain hunters were off to the races somewhat and offered some solid support for the market. The idea that Russia is definitely going to put restrictions on their exports is something that kind of is boosting the market a little bit, but it certainly looks like the idea that there's empty shelves at the grocery store that has everyone thinking that perhaps there is some room on the upside, regardless of the fact that we have some plentiful supplies, not just domestically, but kind of around the world. And I think that the spring wheat basis is a little bit lower. There's a couple of things that are really kind of negative for wheat, and the market still was able to get a little bit of a rally in. That tells us there's still plenty of volatility ahead. We better watch out. I think that 2 days sometimes is an eternity with the expansion of the virus around the country. I think some of these headlines could be playing a role in the markets as we start the week next week.